Folks, this morning I did something stupid. Something I tell y'all not to do all the time. I chased a stock right at the open. I bought it when it was running, and it cost me $1,640 in about 45 minutes. Now, what makes it worse, it was only about a $5,000 trade, a stock trade. So I literally lost 30% on a stock in less than an hour. It's not something I'm proud of, but I started to realize that a lot of the videos I do here come on talking about our wins and how well we've done. And well, that just doesn't seem 100% honest because we all have losses. We've all suffered that pit in our stomach and watching a mortgage payment go out the window one morning. And so I want to show you what I did, why it was the dumbest thing to do, and how I lost so much money so fast. Let's go to the chart. Now, the stock is Churchill Capital Corp, CCIV. This is an SPAC. It stands for a Special Purpose Acquisition Corporation. Now, if you're not familiar with SPACs, they're probably the hottest thing on Wall Street. Essentially, it works like this. A proven fund manager or sharp businessman who's got a bunch of wealthy friends goes out, they raise a bunch of money, they put together a few $100 million in what they call a blank check company. So it's basically a shell company they're buying. And then they take that money and they go out and buy a business. So they're out in the private sector buying something, and you're hoping that these people who are seasoned investors who know how to price assets are going to buy you a great company at a cheap price. It's going to stock market. It's going to go way up. Well, that's what's been happening the last couple of months. In fact, we've seen more SPACs in the market in the last 12 months, probably than we've seen in the last 12 years. And this is one of them. Now, Churchill Capital came out. As you see, the stock was down here around $10 a share. Then all of a sudden, it just started rocketing about 2 weeks ago on rumors they were going to acquire Lucid Air. Now, if you're not familiar with Lucid Air, it's a direct competitor with Tesla. And in my opinion, their cars look far better. I don't know if they have the same technology. Obviously, they're not producing the same number of vehicles, but they make beautiful electric cars. And they might be the only company that could give Tesla a run for their money. So obviously, the stock took off and continued to take off. And as you see, it ran up yesterday from $18 to $22, and it opened this morning at around $27. But let me show you what happened during that big candle. Now, what I'm going to show you is a 1-minute chart. I'm going to play this in relapse. I'm going to walk you through my morning and show you all the wrong decisions I made and how you can hopefully avoid them next time. All right? And we're going to press play. Okay, so this is Friday afternoon. Notice the strength it had just going into the close right there. Really, really strong right to the close. And then this morning, that's what we got. Okay, I'll pause it right there. We gapped upward. The stock closed Friday at $22. It opened today at $26, $27. So you kind of want to watch these really closely. I'm watching to see if we're going to have a lot of profit taking to suck it down. I'm watching to see if it's going to continue higher. And here's what it did. You got a little bit of profit taking as you'd expect. Now, I was okay with this, because it's the people that just, when a stock jumps $5 overnight, they're going to take some profits. It's going to get exaggerated. But watch this. The stock pops right back up into the highs and starts making new highs. So here, when I'm seeing this thing here, we absorb the selling. We're back to the highs. We're pushing new highs. They're accumulating stock up here. This thing's going higher. And so I bought 200 shares, this thing at $27 a piece. It was around $5,400 into this thing. And watch this. Each of these candles is 1 minute. Watch what happened over the next 30 or 40 minutes. And then it just absolutely falls off a cliff. The stock shot down to a low of around $18. And right there, the stock was actually halted. If you look at these 1-minute candles down here, see this one here, it's 10:03. Next one should be 10:04. This should be 10:05. It's not, it's 10:09. That's because right here on the chart, it was falling so quickly on such high volume that hit what's called a circuit breaker. The exchange halted trading on this stock for 5 minutes. So all of a sudden, I'm going great. It goes back live, falls again. 2 minutes later, it's halted again. See that candle, 10:10, 10:15? Right here at this low, it's hit a second circuit breaker. So I'm holding the stock that I've been in for what, an hour, hour and a half? It's down 30% in 90 minutes. It's hit 2 circuit breakers in 20 minutes. I start digging online. What I find is there's rumors that maybe this Lucent Air deal is not going to go through, that they're either going to have to postpone it or Lucent's going to back out of joining this SPAC, so everyone obviously panics. So, look, you can ride the thing down to zero or you can just take the hit and get out, which is what I did. I sold, I kid you not, it's the low of this candle is 1890. I sold at 1890. I mean, it was the market was halted, so I just hit an exit and get out of the thing. And then, of course, it slowly grinds its way back up to near where it started the day. I didn't get all the way back up there, but it finished the day down about, 10% instead of being down 30%. And look, I'm not going to hide it from you. I'll come out and say it straight. I, Ross Givens, bought the absolute high of the day, and an hour later sold it at the absolute low of the day. Probably the worst trade I've had in a very, very long time. Now you're thinking, Ross, how do you make such an idiot mistake? I mean, you're the guy who told us to get into Einmed back in September, and the stock is at 57. It ran to $5. It's up, hundreds of percent. You're the same person who been telling us to buy that lithium stock, Livent, all of last year. I think it was in the $5, $6, $7 range. Now it's up here in the 20s. If you're in my insider report, we're up 213% on Cardalytic stock. We're up 342 on Matador. We're up 300 on Liquidity, 200% on Traycon. Most of these have only been in 5-6 months. We're up 141% on Vox. We bought that in October. I mean, we've had some really, really nice wins here. This is not my first rodeo. I've traded stocks before. I like to think I know what I'm doing. But the fact of the matter is, everyone takes losses. Now, normally, that loss should be 5, 6, 7%, maybe 10% on a trade that didn't work out, not a total moron move like you just saw me take today. But I wanted to be upfront and show you I make the same bonehead mistakes you guys do. I don't do it as often as I used to, but every once in a while, that greed catches a hold of me. I see a stock going. I don't want to miss it. I say, man, I sure would have liked to buy it at 20. It's at 26. Hell, once it's at 50, I'm not going to care if I bought it at 20 or 26. And I chased the stock when I knew better and took a nice little thump for making such an error. Now, if losses like these are a little more frequent than you like, there is an easier way to go about it. Obviously, I've been trading for a lot of years, and all the trades I give in my insider report service, I can't take myself. Now, look, I'm a firm believer in eating your own cooking, and believe me, I'd be a lot wealthier if I had been taking these trades, but there's a little SEC rule known as front running, and I don't want to go to jail. You see, it's illegal for me to go and load up a bunch of shares of a small stock, then recommend it to my 1,000+ subscribers, let all them pile in, drive the stock up, and then sell at the top. It's a classic pump and dump. It's known as front running. It's illegal. You go to jail, and I will not do it. Additionally, I want you guys to have the first shot at all these picks. That's why we send them out directly via SMS, why we shoot them directly to your email. We want you to have the information immediately so you get first dibs on getting into these trades and making some nice profits like what you're seeing in our open portfolio right now. Folks, these are just these stock gains. Remember, with about 85 to 90% of these stocks are optionable. So most of these we've traded options on. I mean, our options on Cardalytics, I think we sold our last ones for like 1,090%. We made 500+% on the Matadors. We made, I don't remember if Resi had options or not, but I know we made a bunch of money on the liquidity services. Traycon made a ton of money on those. I think another trade for a 900% option profit last month. So, we're having a lot of success with this. But the thing is, we take losses there as well. Please don't take this the wrong way. Not every trade is going to work out. I don't care if you're Bill Ackman, Warren Buffett, or you've got a crystal ball. You're not going to get them all right. The trick is, when you get them wrong, don't get them wrong like Ross did this morning. Get them wrong like we do in the insider report, where it comes down 9, 10%. You cut the thing loose. You move on about your day. Don't quote me on this, but I think the biggest stock loss we've ever taken in the insider report is 20, 21%. The bulk of them, and you can ask our members, we cut stocks loose that are up 3 or 4% or down 3 or 4% just because they're not moving, and we don't want your capital sitting there on the sidelines earning nothing when it could be in the next opportunity that could make you wealthy. So if you want to take a new approach to investing, I encourage you to look into the Insider Report. I don't want to kill you with the strategy. You know what it is by now. We're following the insiders. We're following the folks on the inside, the ones who know the numbers before anyone else. It just makes perfect sense. And by tracking those insiders and analyzing their trades and looking at how they've done in the past and who else is buying and all the other proprietary signals I teach you about in this webinar, we're able to achieve outsized returns, and I want you to experience the same kind of results. So click the link below right now, watch the on-demand training video, or if you already have and you're on the fence, look, take a leap of faith, sign up for the Insider Report service. It'll change the way you invest, and I promise it'll be worth every penny.